A quiet collapse is currently sweeping through the digital economy. Thousands of businesses that appeared healthy just months ago are shuttering. Entire fleets of AI startups are powering down. On YouTube, channels that once generated thousands of dollars a month through fully automated, machine-generated videos are seeing their monetization revoked overnight. Yet in these same market conditions, a different group of operators is pulling in millions. These are solo founders operating without employees, replacing the output of a traditional 50-person agency using about $500 a month in software subscriptions. To understand how these one-person empires actually capture and keep all of the profit margin, make sure to like and subscribe. Welcome to the era of the workforce inversion. The roots of this crash trace back to the gold rush of 2023. When generative tools first arrived, the immediate market reaction was to use them to print volume. Developers built thousands of wrappers, basic applications that were essentially just generic interfaces for ChatGPT. Content creators deployed mass-produced, faceless videos composed of scraped scripts and robotic voiceovers. With technical barriers to entry hitting zero, the supply of generic content and software became infinite. The market value of that output crashed, taking the businesses built on top with it. The platforms hosting this content eventually intervened. In 2026, YouTube enforced its inauthentic content policy, specifically targeting the mass-produced aesthetic that defined the early AI wave. They implemented a strict three-strike disclosure system. Any channel relying on recycled templates or synthetic personas giving advice on high-risk topics like finance or medicine now faces permanent removal from the partner program. A similar correction is happening in the corporate sector. The co-pilot era, where AI simply assisted a human at a keyboard, is over. The new standard is agentic AI. An autonomous agent monitors data, identifies a problem, and executes a multi-step workflow independently. The gains are real. Klarna deployed an autonomous system replacing 700 customer service reps, driving a $40 million profit boost. Social platforms and enterprise markets are now punishing lazy automation while rewarding autonomous, systematized execution. As it became easier to automate generic tasks, the market value of a human point of view increased. When everyone has access to the same machine output, the differentiator becomes the curation of that output. This gap is the human trust premium. Creators surviving algorithm shifts use AI for efficiency, but invest heavily in human curation. This hybrid model targets high-intent search terms. A single properly curated channel can generate over $50,000 a month. This dynamic is the engine behind the solopreneur empire. Take DesignJoy, a one-man firm. By spending $1,400 to acquire an existing social media audience, the founder secured a distribution channel that landed a $2,500 a month client in less than a day. The philosophy of these empires is to do less of the wrong work. Instead of hiring employees, they cap their client lists, raise their rates, and keep all the profit. To maintain this scale, they automate their unsexy operational tasks. Tools like Stepper.io handle their lead routing, invoice processing, and customer onboarding sequences without human intervention. The most profitable business model in 2026 is a relentlessly automated operational backend, fronted by a highly trusted, human-curated brand. Surviving this shift requires a specific skill stack. It takes about 6 months to move from being an ads guy or a bookkeeper to becoming a high-ticket specialist. The transition is a pivot from selling hours of labor to selling the final destination. You are no longer providing a service. You are providing the solved outcome. This means evolving from an admin assistant into a fractional COO for scaling companies, or moving from a producer of faceless AI videos into a specialist in hybrid visual journalism. The corporate ladder that sustained the middle class for 50 years is vanishing. The entry-level roles that used to serve as training grounds are the exact same tasks now handled by autonomous agents. The modern worker faces a binary choice. Either you build the autonomous agents that run the systems, or you will be forced to compete against them. The technical barrier to entry has never been lower, but the market's barrier to quality is at an all-time high. Which industry do you think is most vulnerable to the rise of agentic AI? Let us know in the comments. If you found this breakdown valuable, like the video and subscribe for more insights on the future of work. Labor has become a commodity. In this workforce inversion, wealth belongs to those who own the systems, not those who rent out their time.